In early June 2026, global commodity markets experienced a sudden, violent reaction that caught supply chain managers entirely off guard. This chart tracks that specific market shock. We're looking at a sudden vertical spike in major food commodities, where global wheat indices jumped roughly 20%, and rice prices surged nearly 15% almost overnight. These price increases are frequently written off as routine markups or standard inflation, but the actual mechanism driving the cost is much further upstream. This satellite mapping shows Pacific Ocean temperature anomalies. Deep red zones pooling in the east confirm a strengthening El Niño. As this enormous warm mass expands, shifting atmospheric pressure rewrites global weather patterns, aiming prolonged droughts directly at the planet's critical agricultural hubs. The current El Niño cycle serves as a brutal, real-time stress test on a global food supply chain operating with zero margin for error. To understand the disruption scale, we must track shifting weather patterns away from the Pacific and into the major agricultural belts of the Indo-Pacific. In India, the breakdown began with the monsoon season. Weaker than expected rainfall severely delayed sowing activity for millions of farmers across the country's primary grain-producing regions. A localized delay of that scale immediately creates a geopolitical threat. As domestic crop yields look increasingly uncertain, the probability that the Indian government will enforce strict export restrictions to protect its own food supply goes up significantly. Moving down into Southeast Asia, extended dry conditions are severely limiting staple crop productivity. The cultivation of rice requires massive amounts of standing water, and without consistent rainfall, entire growing cycles are left stalled in the mud. The drought also targets highly lucrative global trade commodities like palm oil. Extended dry weather reduces the yields of these massive commercial plantations, constraining a major economic driver for the region. Further south, Australia is preparing for its own production crisis. Meteorological forecasts pointing to severe dry conditions later in the season place one of the world's most strategically important traded commodities, Australian wheat, in direct jeopardy. These are not isolated weather events. They are simultaneous breakdowns occurring across the primary production nodes of the global food system. The weather disruption is compounding a separate crisis in the agricultural input market. This El Niño cycle hit an industry already struggling with a heavy reliance on industrial fertilizers. Severe disruptions to global fertilizer flows predated the weather shock entirely, driving up baseline production costs for farmers everywhere and destroying fertilizer affordability. This dual-axis chart illustrates the economic trap. Crop yield expectations are dropping sharply due to climate volatility, while fertilizer input costs rise steadily, squeezing farm profit margins. Squeezed budgets force farmers to apply less fertilizer, guaranteeing even lower yields and a downward spiral. The collision of climate failure and input inflation creates a cascading crisis. It travels straight up the chain, making it nearly impossible for food producers, processors, and retailers to maintain a stable market of export choke points and shipping terminals before landing squarely on vulnerable import markets. For African economies reliant on imported wheat, rice, and fertilizer, this translates directly into soaring import bills. Sustained price increases on raw commodities instantly place pressure on the physical commerce of everyday food supplies. Analysts have identified Southern Africa as one of the regions heavily exposed to the lingering, broader effects of this emerging El Niño cycle. Agriculture now functions as a vital macroeconomic choke point. Because global supply chains are so tightly integrated, a single weather anomaly in the Pacific can destabilize trade and national budgets across multiple continents simultaneously. Surviving future disruptions requires new physical and technological frameworks. Countries need aggressive investments in deep irrigation, climate-resilient farming technologies, modern storage infrastructure, and highly efficient water management systems. The 2026 El Niño cycle operates as an early, unforgiving audit of global resilience. It highlights exactly where the supply chain breaks, proving that capital must urgently flow into infrastructure before the system faces its next major stress test.